Welcome to this week's gold analysis from May 16th to May 21st. Excuse me. We'll be going over what happened last week, what our analysis was last week, how we capitalized on it, what the analysis for this coming week is, and where we can potentially see gold head up. So let's just jump into, I believe this is last week's analysis that I sent to the group. And in this analysis, just 1 second. In this analysis, I discussed that we were looking for potential areas of pullback, right? And then that we were either looking for 1826, 1811, 1810 area, or 1797.5 area. And I said that this was a broken accumulation, but not yet retested, right? So there's a possibility we could pull back to 1797, but we were just, in any case, looking for a pullback to any one of these key levels in order to take buys. First to 1843.5 key level, this high up here, and then I said safe buys on the break and retest of that, and we continue up to 1872, which was our higher high target, right? So we did. This is how it. This was the analysis I sent to the group. This was like a part of it. This was explaining one of the scenarios, and essentially we're looking for buys from 1811, 1810 area, and then if you didn't catch these buys, you can wait for the next key level to be retested, and buys would be taken up to 1843. So I actually caught these buys because I didn't get in here. I got in over here. But essentially, I'm just going to remove some of this. You can see that gold actually played out perfectly. There was, as you can see, it played out to perfection. We had three scenarios, right? Buys at 1826, buys at 1810, 1811, or buys at 1790. 7.5 was the level that I had from the analysis, right? So as you can see, we'll go down to, this was the 30-minute time frame. So as you can see how perfectly it played out, right? It came down, 1 hour will be cleaner. It came down to 1811, 1810, and then rejected it. And then I said also that once we broke back above 1826, we could get buys up till 43, right? Exactly, it rejected. This scenario played out perfectly. Now we're at 1843, right? That's so I actually took the buys during London right here when price went back above here. I watched lower time frame price action. I entered here 1826.6-ish, and I took profit at 1837. So 110 pips on that. That was a 1 to 7, 1 to 7.5 risk reward trade. But yeah, super clean. I didn't get down here because I wasn't on the charts during this time. But I did wait, and I waited till we broke back above this level to take the buys. Excuse me, just have a little cough this morning. Nope, it's not COVID, so don't worry about that. So anyways, let's go on to this week's analysis. So since we're at 1843.5 area, ignore the 0.1, it's 0.5 here. So what I'm also looking for is, again, we're looking for a pullback because we know the weekly candle has to make a liquidity wick in the opposite direction before pushing into the original direction, right? So we can watch for a pullback to 1826.5, 1826 area, right? So potential pullback level for pullback, create higher low here, or pull back to 1810, solid key level previously up here as well, pull back down there, and then we can push up, right? So that also, we're just essentially looking for any form of retracement in order to get the buys. This is a less likely scenario, but that doesn't mean that it can't happen. This is still a level that hasn't been retested, right? We saw a price accumulating here for over almost 2 weeks, and then we had a breakout and we pushed up. So we pushed up from 1766 to 1843, right? So around 800 pips we pushed up, we pulled down, but we still haven't retested. So just because it's far away doesn't mean it's not possible. It's just less likely to happen, right? Because we do have a couple other higher time frame key levels in between that we would have to break through in order to go, in order to come down here. But that doesn't mean I'm looking for sells. My bias is still buys, and my bias has been buys since we've been observing gold from all the way down to 1680s, where you've seen me call out those buys in the group day and night. We've called out all these buys. We called out the sells from up here to all the way from up here, right? So essentially, either one of these pullback scenarios, or if that doesn't happen, and instead what we do end up getting is a break above 1843.5, then what I'll look for is I'll look for buys when this level is broken. And then you can see I have other levels defined here as well. But eventually our higher high target is because we just formed the higher low, right? Every time we form a higher low, we push up, we have a nice impulsive move, right? In with one directional volatility. So once we break above here, then we can first push to 1851, 1861, and then 1871, 1872 area that we also had from last week's analysis, right? 1872 was our higher high target. That target remains the same. It is still 1871, 1872 is our higher high target. Once that area breaks, you can see it's a level of there's this daily candle body level at 1871, 1872. So higher time frame resistance. Once that would break, then we can see price reach like 1891 and then possibly 1900. But just know that every time we do create a higher high, we do have some sort of retracement such as this, then we pull down, right? So let's just jump into the charts over here, the chart here, right? So as you can see, we'll actually go on daily. So this level was adjusted a little. It was originally down to 1794. But what I actually did to that was I went to 4 hour and see, it still lines up here. But when I was observing that price action, I actually moved it up to like up here, 97.5, because it encapsulated this area, the general area where price wicked up. You can say, yeah, it can be here too, but I just had it up there. So we'll just don't worry about just because it's missing that. It's not completely at the candle body. But anyways, so see candle body right here, perfect retest, push up, and now we're at this candle body level right here, right? So if once we do break above 43.5, you can see that we already created that higher low, right? We created that higher low. So once we do break above here, then the next level that price travels to every time it breaks above 43, you see it retests it, and then it goes up to 72 first, this area right here, and then potentially up to 1891 and 1900. So what we could be looking for is, remember how we talked about the different possible scenarios, and the same thing, this is all I look for is I map out the scenarios and I wait. I just wait for price to come to these key levels, right? And that's the thing, they just fucking work. So when we're waiting, so what we could potentially look out for is, okay, let's map out some possible scenarios right now. We're on the 4 hour chart. Okay, let's say price does, or we can actually go down to 1 hour and then 1 hour, then draw from here, right? So let's say you're waiting and this is one of our scenarios, right? Price coming down to 1826, 6 is area, and then you watch for reversals. So if you, let's say you get a reversal here, you enter buys here, your first target would be 1843, that range, right? Once this breaks, because now it's likely to break since we just formed the higher low. Well, if this breaks, then what you could do is take, and you just want to hold the runner, right? So if that was to break, then it's clear move up. We'll first go to 51, we'll have to break through 51 to go to 61, and then that to go to 1887, 1871, sorry, 1872, 1871. We'll just move this up actually just to keep it. Actually, you know what we'll do? 1 second. Just move this down, level down to 0.5. Cool. All right. 0.5. We can do 61.5. Sure, this is closer to 0.5 as well. Actually, we'll do this. Yeah, 51.5. Just trying to round it out. This was also 0.5. 26. And this actually, we can just do it to, oops, 1810. Sure, 0.0, right? A little more accurate. This was 97.5. I had it at, but for the sake, so we'll just 97, right? 0.0, 0.0, 0.5. So a lot of 0.5 levels, right? And I'm pretty sure I missed a couple levels that I've had drawn from before. This was actually 22.5, called the buys here perfectly too. And that was an analysis sent to the group. This one I'll post on YouTube too. So if you're seeing this on YouTube, what's up, what's up? Anyways, yeah, so we called out buys from every fucking level, and I'm still confident that we're going to get up to 71 easily. And once we do break past 71, we can see that price tends to generally react to 71, pull back down. Last time I pulled back down to 1826 area and then continued pushing up all the way till 1900. So you can see that our first higher high target remains 1872 area, right? 1871.5 area. And then then the next one would be 1891 and then 1900. So those are actually also 1900. I don't have a clear level there. Like I almost do, like over here. Actually, you can argue that there is, but I just did it because it's also a psychological level, right? So this level right here is drawn, 1890 is drawn from the candle bodies, like the daily candle body right here. Right here, also some price activity here. As you can see, once we broke above this daily candle retested down here. So solid price activity here, also daily candle bodies right here. Clean, right? So that level, but eventually first, what we're looking out for is we're targeting this area 18. And as you can see, you can drag that zone out. We're targeting this area first, 1871. That's our first higher high target. We should see price come there. Once we break through that, then it's pretty easy route to 1890, which is another 200 pips, and then 1900. So essentially first target, second, and then third, 1900 would be the higher high. But this would be the first higher high target, right? We just made a higher low last week. And then once we do break above here, it could be safe buys easily. As you can see, safe buys on the break and retest. So in that scenario, in that case, what you'd be waiting for is you wouldn't want to take buys immediately, right? Because you'd be buying at a yearly high. A yearly high? No. Yearly high was in January. But you'll be buying at a most recent high, as in like the past couple months where we've been at since 1600, right? So you'd want to wait. Let's say something like this happens where price is consolidated during London, does some shit, pushes up. You don't want to buy as soon as it breaks above here, because what's stopping, let's say something from this happening, boom, it goes straight down, right? And then it pushes down to this key level sets up, and then the actual buys kick in. So what would be the safer thing to do is, okay, let's say you're waiting for here, price pushes up. Oh, now it's gone to this key level. Okay, most likely it's going to come down, right? It's going to come down, retest this area because we've been here for a while, right? We've been to this area right here. So now what this tells you is now you have a solid range. You have a range that you can target first. You enter buys now it's a better probability that it'll continue up to at least here, take your first profit, and then you can hold a runner. What will happen next is most likely break above, retest, create that range, and then push up again, right? So it's important that you wait for that range to be formed, because if you're just entering as soon as it breaks up, you bought at a high. That's a less high. There's not that big of a probability that it's going to continue up. It could just as much as continue down like that, right? Fake out just like and you would end up being one of these wicks, right? You'd be entering buy at one of these wicks. So it's important you wait for what's it called, a range to be formed before taking that entry. And that's how you properly trade a break and retest, right? Not just buy it when one 15-minute candle breaks above. That's impulsive. That's not logical. You're just basing your trades off of candles, and the market is much deeper than that. It's not a one-dimensional market. It's a multi-dimensional market. You have to have that multi-dimensional perspective to be able to effectively trade it and actually be able to capture high quality trades like we've been capturing in the group. Like you see, like from the group, like you all see these 300 pip moves happening day in, day out. On US 30 last week, we called out 700 pips, right? Like we called out so much, 700 pips in a single fucking day, right? So it's important that you look at it, you give the market the respect it deserves, and look at it through a holistic point of view rather than just candlesticks and price, because that's not what it is, right? So the second scenario is, we pull down to here, and then we can get buys from 1826. Once this breaks, once this would break, then you look for buys once there's a range created, and you can also enter buys here. So essentially, I'm just going to be buying at any key level. I won't be buying if it comes here, because to me, I don't have a key level here. These are just like every time price is here, it either goes up here or it comes down here. So it doesn't make sense for me to be, excuse me, buying in the middle of a key level, you know? So that's it for gold. And as you can see, key levels work perfectly. Had that in the analysis, 1811, 1810 area. Excuse me, 1810, 1811. And this is actually one of the 3 screenshots I sent. So I actually broke this scenario down and I drew it 3 separate times. So one of them was pulled down to 1797. The other one was pulled down to 1826. This is why you're not trying to guess. You're not trying to predict. You are trying to map out scenarios and act on whichever scenario happens. You adapt and attack. What happened was we didn't get the buys from 1826, as you can see, but we did get them from 1810. But since I missed this, I did take this. Once the range was created, I got in the buys and I took profit for 110 pips. And that was the only trade I took last week. It was a 1-7. I'm taking less and less trades and they're just making more and more money. You know what I mean? It's like the less you do, the more you'll make. So if you can just stick to these key levels, that's it. That's the analysis. Like, you'll be golden if you're just taking entries at the key levels. And these are predetermined. So, and these works because we've been using these key levels all the way since fucking here. Like, like we've been calling out all these moves, like every single move, like all the cells from down here. I call these cells out, and all up here, all the way down till here, 1682. Every analysis video I went over this. And then all the buys all the way up to here. And we're going to get up to 1871, 1890, 1900 potentially, right? So that's it. That's analysis. You can screenshot this if you would like. But yeah, that's it. Take care.